So welcome to another Bitcoin Intelligence Report number 25, and this is monetary mechanics. And here we check the plumbing of the monetary system, what drives liquidity, and especially the US and China to understand what happens to Bitcoin prices and turbulences ahead. So let's dive right in. So this is called Men at Work because it's not necessarily the way we think, but a lot of things going on structurally inside the US and of course outside as well. And I'm recording this exactly at the time where both those gentlemen are speaking. So lots of things going on. But let's dive right into the dollar. So first, DXY is what we have been tracking and still on a downtrend. So again, this means liquidity, this means credit, this means leverage. This also means everybody who needs dollars are able to get it for the time being. So it's always a swing, and we have to track it very carefully because maybe a reversal could be on the way, but we're still bearish on this specific asset here. But since July, so since July 1st, we're seeing a bit of a reversal. But let's see if that continues. But for the time being, we are at 21st Capital, still bearish. So, and of course, Bitcoin doing its thing, best asset on what comes to liquidity barometer. And it's just basically we just revisited all-time highs at 124,000. Now a quick correction to 117, but again, very resilient and really consolidating its play as it not being just a leverage play on NASDAQ, for example, and becoming more of a global commodity, and that just continues. And of course, we would love to see a little bit of a breather to increase position. So if you see any kind of turbulence for the time being, I will definitely take the opportunity here. Now, we also are tracking, so we discussed on the report how we are tracking the TGA. So that's the Treasury General Account. This is the account that was used by the government to pay for expenses, especially before the debt ceiling being raised. So this account has been drained, and then now it's being recomposed, so refilled. And the TGA refill creates normally that dynamic is liquidity negative, which is bad for risk on assets like Bitcoin, for example, right? So, but here, as we have been saying, Scott Bessent has been carefully crafting a way to sculpt the way the U.S. issues debt, being very intentional in what kinds of debt he issues, especially on the short term. Those are being the best ones because they're used as pristine collateral. And at the same time that you drain liquidity from the markets to refill this account, you are also providing liquidity to the market because that T-bill is a great collateral for credit generation. So those are two counterbalances. And right now, this account is just over $515 billion, if I'm not mistaken, and we need to get it back to 850. So we are over halfway there, quicker than expected, and at the same time not creating too much of a turbulence. And we discussed that in previous reports as well, how that is being carefully crafted. So we're still going to have a look at it. But also it's important for us to understand that general excess liquidity is over. So what do I mean by that? This is another type of account that we call the RRP, the reverse repo account at the Fed. So basically, when you're a bank, you have excess cash, excess liquidity, then you're not able to deploy into the market. You do have an account at the Fed where you have risk-free interest, but this is the lowest. This is the bottom part of the system that has like a floor kind of interest rate, which is the RRP, and now it has been completely drained. Most of this account, almost all of it, now we only have like 30 billion left, has gone straight to the TGA to help with the refill. So that was the primary source for the beginning of that. But what does that mean? Does that mean that we're going to lack liquidity? All of a sudden it's Armageddon or whatever? Not necessarily. So this means that excess liquidity is over, but this money is just being deployed, of course, to the TGA, but will be deployed as well into bonds that it just provide better options, right? If you were a bank, do you prefer RRP or get a T-bill? You always want to go for the T-bill because of the higher interest rates as well. That deploys into the market, that generates liquidity as well. But right now, it's focused on refilling the account, the TGA account that I just explained. So no, not really any turbulence there either. Also liquidity positive. And also very liquidity positive, which helps Bitcoin prices, is the MOVE index. So what is that? So basically it's the volatility of the price of treasuries. So why is that important? We track also, it's also important to know that if you have interest rates going up and down, or the price of bonds going up and down, they are inversely correlated, right? The higher the price of a bond, the less of a yield they pay, and vice versa. But you don't want that to move too much, because if you use that as collateral, and that is a word that I use a lot because it's part of monetary mechanics, banks are able to leverage more if it's not too volatile. The more volatile it is, the less safety you have when you leverage. That's the idea. The more leverage you have, the more liquidity you have. So if you see that going down, and this is part of the work that Scott Besson is actually doing, so far he has been successful in controlling that volatility in the bond market, and they are very low, at least for now, for the last few months. So year to date is the lowest volatility of 2025. So that's for sure liquidity positive. And also, so direct statements towards Bitcoin coming straight from Scott Bessent, talking about Bitcoin. Right? So Bitcoin, they explicitly commit to explore more ways to acquire and expand the reserve. So this is to make sure that everybody understands that this is indeed part of the strategy of the United States. So we had a lot of talk about it not being really the case. They just gave up on buying more or whatever. So this is just a way for them to confirm that since they want to become, as he says here, a Bitcoin superpower of the world, which is pretty interesting to see. So interesting times. But also very interesting is this measure by the Federal Reserve, and this is all about the deregulatory agenda. So remember, men at work, lots of things going on in the financial system in the US that are being changed fundamentally, and this will create a lot of impact mid to long term, mostly. So the Federal Reserve announced the end of the novel activity supervision program. So basically what it means is, and I felt that as well myself. I had friends, for example, who had an account at Chase Bank, for example, or like a big bank where we call it GSIB, a global and globally systemic important bank. And those banks cannot touch crypto because of the risk profile, because they are in such scrutiny that just taking the risk of having somebody having a checking account and doing transactions with Coinbase, Kraken, Binance US, or any other exchanges would have them banned without any kind of questions just because they dealt with crypto. So this ends here. So that's basically another way to provide safety for you to deal with digital assets as well. And that was part of this program. And now they're just returning to normal supervisory processes and the Federal Reserve, which is great news, and also fundamentally, sort of structurally interesting for Bitcoin, of course. But at the same time, you see more and more. So big theme that we have to discuss is for us to to stop analyzing macroeconomics as just numbers on a screen. So it's way more related into a deglobalization scenario or decooperation, countries thinking about how they can protect themselves, being more sovereign. So this is the idea that absolutely is going to trump everything, and pun intended, in what comes to the how you analyze your investments and the importance of Bitcoin in that scenario as well. So if you have GDP, for example, it doesn't really matter if it goes up or down, but what that GDP is for. That's something. It's a recurrent theme from Michael Every from Rabobank. I had many conversations with Brent Johnson and also him on that matter, where it's really about the geopolitical aspect of the economy. And now you're going to see more and more examples like that, where the Trump administration is actually considering taking a stake in Intel. And this is very the Chinese kind of playbook, where you have more and more interference and more of a fusion between the government and companies that will create scenarios where specific sectors are going to be favored against others, depending on exactly the goal of that administration. So we're going to see the theme coming more and more into play, and that's how important Bitcoin gets as a way to get out of that and protect yourself. And of course, as I record this, we have the meeting that just happened between Trump and Putin, and also lots of symbolic things here. So just the choice of the place being in Alaska. You also have B2 flying over, a flyover just exactly at the time where Putin is walking. Many symbolic things to show, like, this is about strength, this is about sovereignty, this is about access to the Arctic, this is about talking about, of course, the war is the official agenda, but for sure, both countries have access to the Arctic. They want to expand on that. There's a lot of conflicts with Europe and all of that. So this will provide a lot of obstacles, provide a lot of noise into what happens to liquidity as well, especially in the scenario that you talk about annexing Greenland or Canada. So it's all a matter of understanding those moves, or the Panama Canal and all of those trade flux and supply chains. And here you also see more examples of the government admitting that we are basically on a K-shaped economy. So whoever owns assets becomes richer, whoever has a salary becomes poorer and gets diluted. Because this is exactly the, as for example, Darius Dale from 42 Macro would say, the paradigm C, where we're just accelerating and trying to outgrow the debt. So that's the way most governments do. And this is exactly what the administration is doing as well. However, when you consider actually getting an actual stimulus check, something that we have seen as an emergency measure in 2020 for COVID, now you see exactly the same thing happening, but for those who may be left behind. So the lower and mid class, lower income classes, which is exactly who has been left behind by the K-shaped economy. But at the same time, this is extremely inflationary, since you just produced checks for $1,390 per household, but they're still considering it. It's not confirmed yet, but those ideas have been floated around a lot. And this is, of course, inflationary, since it creates some initial demand that, so less time, the less experience was most Americans would just spend the money right away, especially if they need to take care of more immediate bills. And at the same time, it's interesting to see that if inflation is controlled and you need to cut rates, why do you need to stimulate something that is working so well? So it's not partisan at all. So it's just an idea to give you, so you understand the dynamics and all of those conflicts. So you have a conflict with the Fed, you have the Treasury trying to absorb the Fed and have monetary policy under the same roof of fiscal policy. And now you see those kinds of stimulus going on and a stake at Intel. See what I'm saying? So many of those pieces coming together. And also, an interesting fact is Ray Dalio also done a video about that on our YouTube channel, where he basically went from a stance of only defending, only proposing you having 1% of Bitcoin in your portfolio, and all of a sudden, several more percent, I think it was 15% of your portfolio on Bitcoin, and now he's just saying that in his view, real estate is not an effective investment strategy in our current economic environment. And he basically says that real estate is more interest rate sensitive than inflation sensitive. Also easy to tax, which limits the impacts on your ability to diversify, and also makes more difficult, etc. So this kind of corroborates what Michael Saylor would say as a digital Manhattan, for example. You don't get the tax every year on that just by holding it, and you can protect yourself more. So is he actually advocating for that and contrasting? So this is a very interesting movement to see as well. So this is for the United States. So let's talk about China. Also, for different reasons, also liquidity positive. So the US, of course, everything that I just said is bullish for Bitcoin, bullish for liquidity, despite some turbulence that might happen ahead, especially on the geopolitical sector. But now on China's end, we see the huge builder Evergrande, I think it was one of the biggest, if not the biggest on earth, just booted out of the stock market. So they just got delisted from Hong Kong exchange based on the fact that it completely collapsed on their bonds. And this is a big deal because it creates a deflationary spiral that has been around China for a while on the real estate, and just a lot of buybacks, a lot of buying bad debt and trying to replace that. So the problem in China is more of the corporate debt and not the public debt as in the US. But again, it also, they are doing a lot of stimulus to try to get that real estate market come back, and also stimulate the domestic consumption. However, the numbers haven't been that great. So if you see here the industrial production, of course, it's still positive, but less than expected. And also retail sales, that was actually the biggest subject for the 5-year plan of China. It's still not, I mean, it's there, but it's not really responding to expectations. So we have to wait and see. It is slowing down more and more. But this will, of course, create the scenario for more stimulus. So this is a very liquidity positive as well. And we should see, I would not be surprised if we have more packages coming in. Also, important to see about the investments. So building installation works. So you have a negative growth, and also into the private investment. So you see here that investment in fixed assets are more the state control. You see how the government is actually pretty present, and you can make a parallel about the United States. So that's how both countries are just becoming more and more similar, even though they're completely on a huge divorce of globalization. They're becoming similar in their ways to act. They're just trying to get their handicap compensated because they have different problems that they're trying to catch up on their end. So the U.S. on energy, factory producing goods, and of course China as well on the other end, trying to get rid of the dollar, create a new monetary system, and also expand the domestic consumption. So very interesting scenarios, and both of them require a lot of investment, and based on the fact that these are number 1 and 2 in the world, that's why we have such a double pillar for liquidity that drives asset prices. This is why we see them in a very closely manner. All right, so this is it for monetary mechanics. I hope it was helpful, but just to make sure for those who read the report, so we are quite bullish on the S&P 500. The dollar, I would still expect for it to be on a bearish side, but we're still looking for a reversal here. And again, the Bitcoin for sure, an extremely global commodity and also a nice liquidity barometer. All right. See you on our next report next week.